Hey guys, it is Julie here with TipRanks. Today we're taking a look at 3 companies that combine investors' 2 favorite things. That is growth potential and passive income. All 3 stocks that we're looking at today have buy ratings from analysts with double-digit upside potential, and they also pay a dividend. So we're going to take a closer look at what these companies do, their dividend information, and what analysts are predicting for their future. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out the TipRanks Instagram page at TipRanks for Investors for a lot of great stock-related content. All right, now let's get right into these growth dividend companies. Starting off with American apparel company, Kontoor Brands. They trade under the ticker KTB and currently are at $63.24 per share. They pay a dividend of 40 cents per share on a quarterly basis, with the next ex-dividend coming up on June 7th for payment on June 18th. That works out to a dividend yield of 2.51% compared to the sector average of 1.38%. You can also see on the bottom right here that they come with a 10 out of 10 on the TipRanks Top Smart Score for an outperform rating. Kontoor Brands has been paying that dividend just since 2019, but that is when the company spun off from their previous parent company, VF International, who had been paying a dividend since 2010. Kontoor Brands is the parent company of popular denim companies Wrangler and Lee. They have over 200 years of combined heritage, and they created the denim category with their brands continuing to define modern culture. Wrangler is a leader in the men's denim in the United States and had $1.3 billion of revenue in 2020. Their Lee brand is a leading denim brand in China with $688 million in their 2020 revenue. They have over 14,000 employees worldwide throughout 60 different countries. 36% of their products are produced in Kontoor's owned and leased facilities, and 120 million units of apparel and accessories are produced. The company also has several initiatives focused on sustainability. By 2025, they plan to power 100% of their owned and operated facilities with renewable energy. They want to save 10 billion liters of water by 2025 and source 100% sustainable raw materials, including forest-derived and animal-derived materials by 2023, cotton by 2025, and synthetics by 2030. Kontoor recently reported their 4th quarter earnings report, and they came in ahead of analyst expectations. Their earnings per share came in at $1.43 compared to analyst forecasts of just 87 cents, and also well above the 27 cents in the year-ago period. Their revenue increased 29% year-over-year to $652 million, topping analyst expectations of $605 million. Kontoor Brands currently has 4 analyst ratings on their stock, and it does come in as a strong buy. This is based on 3 buy ratings and 1 hold. The average price target of $78 would be a 22% growth potential. The most recent rating came just yesterday, with a price target of $97 for a 52% growth potential. Second on our list today is Edison International. They trade under the ticker EIX and are currently at $56.53 per share. Edison International pays a quarterly dividend of 66 cents per share. That works out to a yield of 4.54% compared to their sector average of 3.15%. They recently had their dividend payment date on April 30th, so the next payment will be coming up this summer. Once again, they score a 10 out of 10 on the TipRanks Top Smart Score. Edison International paid its very first dividend back in 1910 and paid it consistently from then for a very long time until they did have to cut it between 2000 and 2004. They have been paying consistently since then. Their vision is to lead the transformation of the electric power industry towards a clean energy future. Through their subsidiaries, they generate and distribute electric power, as well as provide energy services and technologies, including renewable energy. With 135 years of innovation in their history, their company is well positioned and prepared for the work that lies ahead as they focus on opportunities in clean energy, efficient electrification, the grid of the future, and customer choice to strengthen and grow their business. One of their principal subsidiaries is Southern California Edison, which is one of the nation's largest electric-only utilities, serving over 15 million residents. Their growth is driven by investment in modernizing the grid and advancing California's ambitious low-carbon objectives. Earlier this month, Edison also shared their first quarter 2021 earnings report. They reported net income of $259 million compared to the net income of $183 million in the first quarter of 2020. Their earnings per share came in at 68 cents, once again ahead of the 50 cents per share from the prior year. Since 2004, Edison International has consistently met or exceeded their core earnings per share guidance, and they have 17 consecutive years of dividend growth, with a compound annual growth rate of 7.3%. Their stock currently has 8 analyst ratings and does come in as a moderate buy based on 5 buy ratings and 3 holds. The average price target of $70 would be a 24% upside potential. Now, the most recent rating comes yesterday, and it is a hold rating, but it still has an upside of nearly 15%. Besides that, we have 3 ratings, all coming in at $72, which would be a 27% upside potential. And third on our list today is Camping World Holdings. They trade under the ticker CWH and are currently at $41.63 per share. They pay a quarterly dividend of 25 cents per share. The next ex-dividend date is coming up on June 14th for a payment on June 29th. That dividend works out to a yield of 2.5%, coming in ahead of the sector average of 1.38%. And once again, we have a 10 out of 10 on the TipRanks Top Smart Score. You may notice on their chart here that they also recently paid a special dividend back in December, totaling $1 per share. As the company's name suggests, they specialize in recreational vehicles and campers. They've grown from a single store in Kentucky to the nation's largest retailer of RVs, with over 160 Camping World and Gander RV and outdoor supercenters nationwide, a full-service call center, and comprehensive website featuring thousands of quality products for RVs, camping, towing, and outdoor living. They are the premier one-stop shop for everything RV. Camping World has been investing heavily in growing their business. Just looking at some of the recent headlines from the last couple of months, you can see them investing in audio entertainment app, a peer-to-peer RV rental marketplace, acquiring Helmerson RV in Minnesota, acquiring Boat and RV Superstore in South Carolina, and appointing a new vice president of learning and development. So they have a lot in the works. Camping World also released their latest earnings report earlier this month. Their revenue increased by $530 million to over $1.5 billion, while their gross profit increased by $217 million to $520 million, with their income from operations increasing by $155 million. Following that earnings report, we have 4 analysts who reiterated or assigned ratings on the Camping World stock. And it does come in as a strong buy. With an average price target of $57, that would be a 37% upside potential from current prices. And we don't have any big outliers here, most of them ranging between the $56 to $63 price point for a 34 to 51% growth potential. So there are 3 stocks with buy ratings from analysts, double-digit upside potential, all while paying a dividend. Let me know your thoughts on these 3 companies in the comments down below, and what other dividend companies are catching your eye lately. You know, I always love hearing from you guys. Don't forget to stop by at 3 p.m. Eastern Standard Time for Richard Allen's Power Hour, where he'll wrap up what's been happening in the market throughout the day. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. Thank you guys so much for watching. I hope you have a wonderful day, and we will see you back here next time.